Deven Choksey also joins us to talk to us about some of his top fundamental bets. And Deven, I wanted to begin by asking you about the entire capex theme. Do you think large part of the rally is done? Because in the last few weeks, we have seen sideways moves from the likes of Siemens, the ABB, that big rally that we were witnessing a few months ago. That seems to have subsided for now, with the exception of L&T, of course.
So, good morning, Anisha. Well, I think few things need to be observed. While most of the companies are continuing to take the advantage of a good capex cycle in the country because of the government spending, the spending by the industry, etc. I think the more important part is that these companies would have probably, I think, a growth rate moderated between 15 to 20%. If the economy is growing at 6.5, 7%, probably I think 15 to 20% kind of a growth rate would be a sustainable growth rate for most of these companies. Comparatively, I think most of the companies which are quoted in the market, I think have been driven by the euphoria and they started commanding the PE, particularly I'm talking about the mid-size and small-size companies, apart from I think the MNC companies. They started commanding the PEs of 40, 50, 60, 70s. I think that is where probably I think the problem lies. That on the one side you have a good business situation, continued I think visibility, but on the other side the valuations have far more I think advanced as far as I think the ability to invest, I think, to withhold this kind of valuation for a longer period of time. They're far more advanced in discounted futures, far more early in advance rather. So from that perspective, I believe that I think some amount of moderation or correction in the price is necessary in capital goods segment. Fully concurring that the demand scenario and the business outlook remains absolutely convincing, but the growth rate probably would limit between 15 to 20% on a sustainable basis. And that's where I think some correction in the valuations that I am expecting in the markets.
Okay. Again, BHL. I mean, I never thought a stock like BHL would do so well. Deven, why is L&T available despite all business moving in the right direction, balance sheet moving in the right direction, buyback moving in the right direction? It is still available at 25 times 1 year forward. I mean, isn't that cheap? And why is it so cheap?
So yes, Nikunj, I think it is available at a compelling valuation. I agree, and I think the growth rate for the L&T remains, I think, absolutely very convincing. In fact, never before in past we have seen 3 to 4 years kind of order book visibility which L&T is currently commanding. One of the reasons for which, as I see it, is a challenge pertaining to the maintenance of the margin. On the one side, you are having extremely high amount of competitiveness in bidding and winning the contracts. On the other side, I think the input cost control has to be there. And in a given situation, which remains quite fluid, I think it is difficult for companies to maintain the margin beyond the point. Of course, they have got a passover clause in most of their contracts. But still, all said and done, I think there are certain challenges in the margin. And as a result of which, in the respective results that you see, including the last quarter, the margins have remained relatively more competitive. And that's where probably you are not getting higher valuation. In my viewpoint, even if the company gets 25 times what you call valuation, which is still okay because I think you're growing at a speed which I explained just now of around not more than 15 to 20%. So I think 25 times could be, I think, justified valuation as I see it.
Another stock which is worth revisiting, I guess, somewhere is Federal Bank. Deven bhai, this company has this bank has the highest profit outside Nifty 50. Yet, in terms of an market recall, Federal Bank is right back there. Do you think now next 6 months they belong to the mid-tier PSU banks?
So, Nikunj, I think my understanding that PSU banks have a better times now because of the balance sheets that they have corrected, prepared, whatever you call it as. And I think at the same time, SME, MSME segment where they belong to maximum, as far as the lending books are concerned, I think they are relatively, I think, much stable compared to what they were before. So no questions asked on this particular aspect about, I think, the prospects going forward for these banks. However, in my viewpoint, I think the size would matter. And some of the larger banks, I think, would probably be having a larger advantages, both in form of, I think, cost of funds. At the same time, I think the good accounts that they would possibly cornering for the lending purpose. And I'm talking about corporate segment first. The retail segment, of course, I think the corporate banks and the NBFCs have taken over compared to most of the PSBs. So in a way, I think if I look at it, I think the PSC becomes only, I think, a value play and not a growth play at this point of time. moment I think you find most of the PSBs I think available at the price to book value discounted below 1.5, I think you would find I think some amount of buying interest emerging into them. But moment I think you look at the growth, I think you will probably find your preference going towards the corporate banks and some of the larger public sector banks like SBI and Bank of Baroda. So in my viewpoint, I think I would still stay with I think the larger banks because we believe that the growth in this country, which is now happening and happening at a rapid speed, probably the size of the balance sheet would matter, and some of the larger banks would be the biggest advantage, taking the biggest advantage of this situation. So even if I think in the near term, relatively smaller return that you get from some of the corporate and the larger banks, I would think I think it is worth staying with them for the long term opportunity that we see into this sector.
So that's about some of those PSU banking names as well. Some of the other stocks which reported earnings and they were a decent set were the likes of Emami because there was a bit of margin expansion there. There was also RR Kabel wherein the margins came in quite healthy. The top line growth was also quite strong. In fact, all these wires and cables companies as well, Deven, they have seen quite a bit of re-rating. What's your take on that? And we are going through the list of some of the big movers from the small cap index. BSC is the other one which has made a comeback of almost 250% on a YTD basis. What do you do with the, let's say, cables and wires? Give me a pick from that sector. And what about BSC?
I think the building material segment in which I think most of these particular businesses fall into, I guess I think they are relatively much stronger place than ever before. On one side, we are talking about higher demand offtake for the real estate. On the other side, I think the building material suppliers are part of the ecosystems where they are also having a significantly large amount of business to talk about. Take us a case of Polycab. I think the numbers that they have reported in this particular quarter are completely, I think they are outstanding. In fact, I think they are and completely surprising all the expectations. On the other side, I think they're continuously building the franchisee in FMEG segment, which is also equally important because I think the same customer who is consuming the wire is also consuming, I think, most of the electrical goods. So from that perspective, also, I think this particular company looks interesting. However, having said that, most of these companies have been discounting at least 2 years in advance compared to the current underlying growth. And that's where I would be a little bit wary about, I think, buying them upfront into the portfolio. Maybe I think one will have to wait and see the correction in the market, which normally I think comes in between. I think at such point of time, some of the good businesses can be bought into. If you get 15-20% kind of a fall in some of the stocks, I think where the valuations are at this stage at this point of time, would be a good time to buy at such kind of corrective fall. That is what my understanding would be.
Low for SGX. It's been a flat year, frankly, on all account if you look at it. Deven, which is the favorite? Which is according to you, the best pharma stock to buy right now? I keep one or two names aside. It's been a good comeback year for pharma. Something which we've not talked about it, but something which actually has transpired into price action.
So I think definitely the leaders like Dr. Reddy's, Sun Pharma, and Cipla have shown some good path as far as I think this industry understanding is concerned. They have systematically moved away from the competitive generic business into the specialty generic business, and they have been innovating the newer therapies and the newer treatments. So that is where probably I think these companies have led the path. They have appreciated justifiably so, I think, in the recent past, I think for a variety of reasons. And I think I believe that they continue to hold better promise going forward. However, if I have to look at, I think the next opportunity, which is definitely, I think, asked for, I would probably look at likes of Divi's and likes of Laurus. Both these companies have significantly created the capacities, the expansion, and also I think they've got the ability to supply to their contract customers. However, at this point of time, I think some of the customers haven't been placing the order, and that's where probably I think these companies have found themselves a little bit on a challenging side because having expanded the capacities to deliver, I think they have not found enough amount of intake of orders. Maybe I think that situations gets corrected, which is expected to be. Then in such case, I think these kind of companies could become the contra buy, they are dark horse, and that can be considered from investing into portfolio. If 6 months back, I think our views were, I think, for buying the companies like Sun Pharma and Cipla. Now we believe that I think the view can be shifted, I think, to a certain extent to buy into the portfolio the likes of Divi's and Laurus, which we believe, I think, has a bigger potential going forward from appreciation perspective.
Devin, I also wanted your take regarding some of these jewelry companies. Of course, Titan's numbers were quite decent. You have seen Kalyan move up as much as 150% this year already. And Senco Gold as well had seen a good listing. And since then as well, we have seen decent amount of gains build up. Do you think this is only that seasonal factor which is playing out right now? Or there's something fundamentally that we should see for a re-rating in some of these jewelry companies as well?
Well, I'm not too sure. I think beyond signal factor, I think how one should read this particular business, particularly because the fact that during the wedding season, which is estimated to be about 5 lakh crore kind of a wedding season that India is going to experience till February. Given that kind of a scenario, I think demand for gold definitely is increasing, and so the demand for jewelry. And I think many companies have actually, I think, endorsed this viewpoint that they are experiencing higher amount of demand from consumer. Fortunately, consumer is having surplus in his hands to spend money, and that is where I think we are seeing the continuous expansion into this activity. However, as I seen, I think always that during the festive season, I think the stock prices go up, and post Dhuleti, I think till the Dhanteras of the next year, I think we will find sideways trend into most of the gold and the jewelry stock. So if you are betting onto this particular sector, related to Dhanteras period is the best time to accumulate, I think, these particular stocks. And moment I think you have the festive season started, I think you have the best time to book some profit. That is how you gain maximum into this kind of business, I think, which are holding into the portfolio, which assumes the seasonality factors.
It's good chatting with you. Thank you so much for taking the time out and joining in today.